Hello. Okay. Greetings to fellow traders. Firstly, thank you for coming into this room. This session, we are going to talk on advantage to precise trading zones. Okay. Basically, what we will be doing is like what we have done last week. Okay. Let me bring the screen back. Okay. These are the crosses we will be discussing, right? Basically, this Euro USD, Pound USD, USD CHF, USD Yen, USD Canadian, Aussie US, New Zealand US, USD Sing dollars, right? So you can discuss on any one of these crosses pertaining to whatever doubts or you want to discuss on this session. During this session, we can discuss and to look for better trading opportunities, right? And the strongest cross since the morning has been Aussie dollars, and the weakest cross has been cable pound. But unfortunately, the cable has been just moving sideways for the whole day. You know, it has been in a range trading, right? And there is no US data out, so chances are, coming to weekend, the chances are, the market can be a bit pretty quiet, or you don't see much activities happening, right? But anyway, now during this US session, right now the strongest cross is dollar yen, and the weakest has been Aussie dollars. But feel is the Aussie has been pulling down from the high which it made at 1995 level, right? So today is a very critical point for this commodities crosses, especially Aussie and New Zealand, because this two crosses being pretty strong. So today might be a turning point, but again, because coming to a weekend, we are not pretty sure whether, the turn has already happened or it is about to happen, right? So maybe what I will do is, we can look at the particular chart on this Aussie US. Okay, this is a 2-hour chart, which we are looking at on that Aussie. Okay, basically, what it shows is it is about to bottom, right? So, what we feel is, because now is at a very critical place, because see, this is making, in fact, the price has pulled above the prior support, which which it happened on yesterday at 90.70 and just tested. So if the price is start making a break above this level, which is 91.05. Okay, this is a key level to watch, right? And if this level holds and you see the price moving up, okay, then we can confirm that the low is already seen. Then you can see that the Aussie dollar is going to move higher down the road, at least for the next 1 to 2 days, right? So right now at this junction, it is a bit not clear, but we would wait for the price to give us a signal, because end of the day, you have to trade on the price, and the price direction has to give us a confirmation of a turn. So if by any chance, if the price breaks below this 89.75, which the low it registered in the morning during the Asian session, so what we will be looking forward is wait for the price to see whether it breaks above this, and once it breaks above this, then we can be pretty sure that the market has reversed, and we should be looking for, especially if you are bearish on this Aussie dollar, then you have to be extra cautious, because at least it is going to move up for the next at least a couple of hours, right? So as it is right now, I don't see any signals happening, because during this session, like the last week we did, if there is any signals, we will trade on the signals. And do take note that when we trade on the signals, you stick to your rules, meaning in the sense, try not to exceed your limits, stick to your limits, and also always remember that you must always practice putting stop loss with a price target in mind. So let's see, and also do take note on the risk disclosure, right? So this is purely on education purpose. So whatever we are discussing here has to be on education. So you have to stick to your rules. And also, when you want to ask on any particular crosses, please specify the time on the time which you are looking to. Because see, sometimes I do understand that some clients, they take a decision by looking at a long term, and they take the trades on a immediate short term or intraday trader. Because sometimes when you ask the question like where is the Aussie dollar heading, so it is a vague question. So rather than you tell me for the next 2 hours or the next couple of days, so that we can discuss on that particular market which we are discussing. So we will look at the chart, and we can discuss, and we can learn as a group, right? So feel free to ask questions, because right now as it is, the market is not moving anywhere. But what we would be doing on this particular market is, like as I told you early on, the Aussie is, I'm looking to long, because what I feel is this is going to bottom. So yeah, I would be long on the break of 91.05, and if this low remains, okay, that means if the price doesn't go below this low, then I would long on 91.05 and put my stop below this consolidation phase, which is 90.55. So meaning about 55 pips risk. But again, we can look to have a reward of at least, I'm looking to have in the region of at least, just give me a minute. I'm looking at least about another 45 pips move, right? So what we will be doing is, we do a stop buy at 91.05, and stop loss would be 90.50, right? Below this consolidation phase, which is about 50, and our profit target would be 91.50. So this trade would be only valid provided the price doesn't break this low, right? Okay, and because like as I told you, right, today is a special day, because coming to a weekend, and the dollar has been pretty weak for the whole week, right? So we have to wait and see. And also do take note that whatever the price which we are discussing here has to be plus minus 5 pips, because different brokerage firm will charge a different spread, right? Another possible trade which we are looking at is New Zealand. Give me a minute. New Zealand US, which is also a commodity trade. Okay, right now it's trading at 71.20, which is trading at our resistance zone 1, right? So let's see the chart. Let me go show you the chart on that New Zealand US. Okay, again, it's the same scenario, right? So if you notice, right now it is having a pull down. So what we feel is, as long as this low is not breached, which is 7093, right? And in fact, this pattern, this is a Gartley 2-2 pattern, right? So again, it's the same scenario. We would be long. In fact, this would be a better bet compared to that Aussie, meaning you can even buy once it breaks that 71.45, right? So what we will do is, this one we would be a stop buy order, again break above 71.45 with a stop loss of 71.05. Let me get back to the screen. $71.45 we buy. This is a stop buy order with 71.05 is our stop, with 71.95 our exit target. So this again, This is 50 pips, and also the risk is about 40, which is then I think the ratio of 1:1, right? So these are the two potential trades which we are looking at. But again, this is coming to a weekend, so we have to this trade is viable provided this low is not breached. But if this low is gives way, then we will let go this trade. Then we may not take this trade, right? So any questions? Any particular cross you want to discuss? We can discuss, because try to use this session as interactive as possible, because what we like when we discuss on as a group, then we learn as a group, and also we can be more informative, right? Aussie yen again. Can you tell me what time frame are you looking at? And at least I can tell you what view are you looking, because like whether is it intraday or long term or short term. Okay, it's the same picture, right? When you look at Aussie yen, okay, in fact what the Aussie is, the yen, see, when you trade on crosses, okay, the best thing about trading crosses is when you understand our system, and when you understand how the market responds, then things can be much more clearer. Like for example, this dollar yen, which is trading at 90.10, right? So this is within this is right now it is trading within our zone 1 level, right? And the Aussie, which is started to break at 90.40, which is trading above the day, which is morning sessions resistance zone 1, right? So in fact, what is happening at this particular market is, if you look at this chart, which is Aussie yen, and I show you that Aussie US, see that the patterns are similar, okay? Meaning in the sense, you see a hammer forming on a 2-hour chart, okay? I'll show you later on. I'll explain to you on how to take trades, right? So this is showing on a hammer on Aussie US, and when you look at Aussie yen, okay, this is showing something like harami, right? And also it is a similar, there is a long candle, or is a long range candle. So what is happening is Aussie yen, what we feel is, okay, it is going to, again, it's the same similar scenario as Aussie US, okay, and it looks like it is going to bottom, right? And what we feel is, okay, you can turn long, right? Again, at this moment, even if you want, you can look to long at this a moment with 80.75, and if you're intraday or you are a scalper, then these are the two levels whereby we would be looking to stop. But I will be paying very careful attention to see whether the price breaks above this. Once the price breaks or clears this barrier at 82.30, then we can be pretty sure that, okay, the trend has reversed, or the hourly trend has reversed from down to up, or so we can be pretty sure that this already turned. So till then, the right now the picture on this market is the bulls and bears are not pretty sure, but the bears are beginning to weaken. So overall is, again, is the same picture. We look at on this scenario, we would look to long. Either, it all depends what kind of trader you are. If you are a conservative trader, then what I would suggest is wait for the price to break or clear this barrier. Then when it goes up, then the next pullback or the next pull down, then you can turn long, right? If you are a conservative trader. But if you are an aggressive trader, meaning in the sense, if you are prepared to take risk, then you can go long at this junction with these two levels as your stop loss. But again, you have to be very cautious when the price is approaching this barrier, because this is going to be an immediate barrier for the bulls. But once it clears, then you can see the price moving higher, right? So this is our view on Aussie Aussie yen, right? Any particular chart, if you see. Okay, the question is, both Aussie US and Aussie yen, if they break the highest created for today as well as yesterday, then we go long at dips, right? See, that's why I told you early on, okay, being what kind of trader you are. See, because end of the day, a lot of people, they become successful or they become failure is because not that because they do not they do not understand, or they're not well understood the market. Because sometimes, they do understand, but the time frame they are looking at is where they go wrong. Because see, they might be reading on a specific analysis report which says, in the long term it's used that the dollar yen is still going to go down or up. But when you take your trade decisions, you are looking at the current position. So you are not able to plan or maneuver your trade depending on your risk reward and the bullets or capitals you have with you. See, you can be a good trader. Like I think the last week I did tell you the example of a sportsman, right? This being coming into this trading business, this is like running a marathon, right? So you have to maneuver your distance and the speed depending on your stamina you have, right? So you have to play about. The same thing goes, it depends on what kind of capital you have. Based on that, you have to plan your trades and put your trades. So that's what I told you. Depending on what kind of trader you are, you have to plan your trades, right? So the next question is, what significance is the 89 moving average in your charts? What does it tell you? Okay, this is again, I tell you, okay, because this moving average, as far as the moving average is concerned, the moving averages I use is 21 moving average, 31 moving, 21, 34, 55, 89, right? And when you apply moving averages, you must understand the fact, or you must understand how you use it. Because moving average, what happens is, basically the moving average is only useful when the price is having a pullback or retracement, right? So when the price is making a new highs, okay, moving average is, you should ignore that tool, because it doesn't give you any signal or any information, right? So again, it all depends on what kind of moving average you follow. You see, end of the day, every successful trader has got a game plan or a strategy in the way they apply or they approach the market. So it all depends what kind of trader you are and what kind of game plan you apply. See, basically what we do is, okay, we follow price levels, right? And this is strategy. What we do is, because we only apply, like a specific level. We take our trades on specific level, and we put our stop loss on specific leg. So, and end of the day, you must understand that price is a king, all right? And you should be following the price and rest of the tools, like for example your oscillators, your indicators, your RSI, whatever stuff you use. End of the day is all a lagging tool, because it follows the price. So that is a humble request or an advice to you. Try to have this price strategy whereby it can put you on put on control on a lot of emotions, and you can carry on the business. Okay, the next question is, okay, if you watch the intraday highs and lows, and if you wait to break these levels, then take positions, then will this be a wise decision? See, it all depends what kind of strategy you apply. Okay, this I'm talking, on this scenario. Okay, normally we do not follow a breakout strategy, right? But this scenario is special because, as I told you early on, okay, one is because we're coming to end of the week. That's one scenario. And another scenario is the market is about to turn. Okay, if I show you on this, this is a 2-hour chart which I'm showing you, right? So if you feel, see, right now the market, the price has come down so far, from the high, it has made from 86.25, and right now it is about 80. The low it made is about 80.75, which is about 600 pips down. And if you notice on that RSI, it's already like oversold, and right now it is starting to or beginning to turn. So this is a special scenario which we are talking about. So that's the reason why we are saying that, it's best for you to take a trade on breakout, because, we may not know whether this is a genuine turn, which, you see a tall candle here, on this particular time, which it happened about 6 GMT. So this is where we do not know whether this is a genuine, the bulls are coming into the picture, or it's a false break again. So that's where, we are a bit skeptical on this, because, we are not sure whether the market has turned, because end of the day, you must understand that we should be trading on the market and not what we expect the market to do, right? So you should be trading on the market. So this is where we have our reservation, but once it breaks, then we can be pretty sure that the market has reversed. Then we can follow the trend following strategy, right? Okay, the next one is moving average by closing price. Moving average is definitely, it does by closing price. So as I told you, this is going to be a lagging tool, right? So you have to wait for the price to turn, then you follow. So then when you do a price following strategy, then at least you know that the price is expected to turn on certain levels. So that's where, you can put in the least risk with the best rewards, right? Okay, one news on this yesterday suggests that Aussie yen might go down to 74 level. How can such large predictions can be made? I think I did tell you again yesterday. I mean, I told you that we are looking on a specific. You need to have a specific game plan and a specific strategy. So if you look at on the daily wise, okay, in fact, if you look on the daily chart, it tells you that the market has been coming down, and of course, there is more room to go down on this particular market. So this is, again, if you look on the weekly chart, okay, this weekly chart is just telling you right now it has been consolidating. Again, it has got more room to come down. But when you look on the 2-hour chart, what is our view is, okay, what we are saying is, it can go up, then again, eventually it is going to come down. So, when it goes up, then, these are your immediate barriers which you need to look at, which is 82.75, 83.35. So these are the immediate barriers. So what we are saying is, eventually the price can go down. So what we specialize, or what we do on our report, is we are mainly, intraday traders. So we project levels based on daily. So on that basis, so at least we can be precise and we can be quite accurate on projecting on this instruments and the levels. So try not to get yourself confused, because like when you say when you are looking at 74 right now, is only trading at 81.55, right? So we have about another 700 pips move down. So like if you are going to take a short, bearing in mind that it is going to hit 74, then when the price moves up, then you become a bit shaky. Then as a result, especially if you do not practice putting stop losses, then chances are you might be kicked out of the business, because you should know that forex is a very volatile instrument, and then the swings up can be pretty wild, and especially if you are not careful and if you are not precise on putting your stop losses, and chances are you would be kicked out very soon. All right. So try to ask as many questions and many crosses as possible, so that we can discuss on that instrument. All right. Okay. The next one is so plan to trade for a week or month. Which time frame should we consider? Trade might go against us if we in the wrong projections. Yeah. As I told you again early on, okay, it all depends on what kind of trader you are and how much of capital you have for you to take trades. So if you see, most of the traders coming into this business, they lose money, or they tend to lose money, or they get, see, and you ask yourself, right? This happens to most traders, right? What happens is, you would be holding on to your position until to a certain extent, and when the time you decide to cut loss, and that's where the market start to turn or reverse. So this happens to every individual trader. So ask yourself, I'm sure you have been in this business, and when you take a trade, especially when you are holding, especially when you are holding a losing position, these two things can happen. One is, see, you are losing, your position has been, you are holding on to a losing position, which is not healthy. Second thing is, you're also missing an opportunity, because when the price moves higher, or when the price moves against you, you do not have enough guts to re-enter again, right? So as a result, both sides you are losing. But when you use stop losses, when you take trades on stop losses, using stop losses, so when you are stopped out, there's only two things can happen. One is, either the price can, you get stopped out, and the price moves in your favor. So on that scenario, maybe consider yourself as unlucky, and when the market really moves again, then what I would suggest is re-enter again. Okay, that should be the game strategies to be applied. But in the event if you are stopped out and the price moves in that direction, I think you can re-enter again, because on that basis the price can be cheaper or better price for you to take trades. So that would be one of the best game plan or game strategy to be applied for you to take trades, to be safe in the business in the long run, right? So the next question is, what time frame are charts? See, basically what we do is, okay, we do mostly all our projections we use on a 2-hour chart, because 1-hour chart we feel is quite noisy, right? And 2-hour chart, we have been using it for many years, and it works for us nicely. And our entry wise, we look at a lower time frame. Okay, basically we look at a 5-minute or even a 1-minute chart. So these are the ways which we take our trade. So when you look at a lower time frame, the chances are you can take with the least risk with a most profitable or the most rewardable trade. So on this scenario, if you look at a 1-minute chart, so if you feel that the price has come down and the price has not breached the low, and once you start to break that high, you can go along on this scenario with this low or whatever the low which you see it may happen. So once this is happened or this strategy is applied, so at least you know that the price has reversed, right? Okay, the next question is pound, dollar, and euro yen 1-hour chart. So if you look at pound US, okay, this is it is not when I look at this chart, okay, again, it is not given a clear indication of a turn up, right? So overall, it has been caught within this range. In fact, today, our report, we said that that the bears should be controlling as long as that 62.75 holds. If you look at on the report on that FX street, that's what we mentioned, and in fact, it went to a high of that level and started to come down. So overall, we still feel it's got more room to come down. Again, like coming to end of the week, you have to be extra careful or extra cautious. So when we meant cautious, what we have to do is either you have to be very nimble, meaning in the sense like you take up with a very small position, or any quick profit you realize or book your profit. That means like what we suggest is about 30 pips, 35 pips. I suggest you should be booking your profits. Euro yen. Okay, the next question is euro yen again. if you look at this euro yen, it's a similar scenario as Aussie yen. And if you look at on the 2-hour chart, there's a nice hammer formed, which it formed this morning. Is the same position, is the same similar situation as what we discussed at Aussie yen. Overall, what we feel is, okay, the US euro US is about to turn, right? And the dollar yen is also about to turn. So overall, what we feel is it is going to turn up, but it's the same scenario. We have to ensure that this low is not breached. So if this low holds, then we know that, okay, and this high breaks, then we can be pretty sure that, okay, this the low on that hourly chart is already been confirmed, and after that you feel the price should go up for at least for the next couple of hours. So that should be your game plan for this euro yen, right? So the next question is, price behave in such a way that okay, we went in a good positive pips and wait for a reach good predefined, but price reverse without reaching there, and in fact breaks the lowest. What should be game plan then be? Okay, basically what you should be doing is, okay, the game plan normally what we apply is, right, we take a trade, and the moment once the price is in your favor, okay, for example, like it can be about 30-35 pips. So once the price is in your favor about 30 pips, then raise your entry price to cost. So at least in the event the price reverses, then worst scenario is either you would be breaking even, or chances are you won't be losing on that trade. See your end of the day, you have to understand that your plan should be to stay in the business, right? So when the best thing to do, or the best thing to apply to stay in the business, is to prevent a losing trade. That means you can enter a break-even trade, but the moment when you lose trade, ask yourself how many times whenever you have been stopped out, right? Ask yourself how many times your emotion has not been controlling you when when you're stopped out. See, most of the time, whenever you make money, or when you're in the winning trade, that's where you should be trading more. The moment when you are losing trade, that's where you should be learn to control yourself, because because your emotions will tell you, because I'm in the losing trade, so I have to gain my losses. So you force yourself to take again and again, and as a result, you would be losing more. So whenever you are losing, what I would advise is, the best thing is remain calm and wait for a better trading opportunity or better entry signals. So that on that manner, you would make a better trader and better disciplined trader, right? Pound US seems to be going towards a good downtrend. Okay, this pound US, I think I did tell you early on. Okay, this is it is not given us a signal of bottoming, right? So in fact, it is trying to break the morning low, which it happened. In fact, not I think yesterday, So it's trying to bridge. So in fact, if you ask me my view on this, what I will be looking, if I'm looking the next level I would like to pay attention is 60-70, right? And the next level would be 60-40. So these are the levels whereby I would be paying attention on this pound level. That means 60-70, I can look for a quick buy or quick retracement, right? So 60-40. So these are the two levels I would like to pay attention. So till now, if you ask me right now at this level, I do not want to do anything, because I know that, okay, the price has to come around this level. So when it touches this level and turns, then that's where I would go for a quick long. Again, when I say quick long, it has to be about 30-35 pips profit, and not beyond that. All right. Okay, and the next question is, does candlestick patterns really help? Okay. See the candles. See, you must understand that different people will use different following strategy, right? There are many kinds of charts available in the market. In fact, bar chart, candlestick chart, point figure chart. We have a market profile chart. There are many charts. It all depends what kind of charts you apply and what kind of charts you follow. Like for example, I can show you this example. This is a market profile chart. Can you able to see the chart? Give me a minute. I'll show you that. Yeah. See, this is also a chart whereby we can use to see or gauge where is the support happening, right? So if you see this, I mean, of course, for those of you who are new, do not know or may not know how to read this chart, but this chart will tell you where is the important support level or resistance level. So this would be one of the ways, one of the charts which we can use. So there are different charts or different tools, but end of the day, I think, you must have a belief on certain tools which we use and certain strategies which you need to have for you to stay in the business and to trade. Because rather than blindly taking trades, rather than, I feel, the price has come down, so let's go for a buy, or when the price has moved up, let's go for a short. I think, when you do that, I think in the long run, you may not be successful. All right. Okay. Any other questions or any other chart? Because unfortunately today the market has been pretty quiet because there isn't any important US data announcement. So we are expecting the market to be pretty quiet. So the best thing is, you should always look to trade the market and not your expectations. Okay. Any other? Euro USD. Okay. Euro USD. Okay. This is again, we are looking at a 2-hour chart. What I see or what I do on this is on the daily chart. Okay. In fact, it has, give me a minute. I show you the chart. Okay. What I see is on the daily. In fact, if you notice, it has been down for the last few days, and in fact, on the weekly, it also has been selling pressure has been accelerating. So overall, it has been down. So here, right now, as it is, the price is moving up. So any pullback should be an opportunity for the best. So overall, is the market has still not turned yet. So it's still too soon for us to conclude a turn. So again, we have to wait for the price to give us a turning confirmation. Then we can be pretty sure that you can go long on this. Till then, I think you have to have a cautious approach, because overall is the market has not turned yet. All right. So this is our view on this. Of course, you should understand that euro has been strong against the pound. Okay, I'll show you that chart, the screen. Okay, in fact, euro is been strong against the pound. So what happened is euro pound has already bottomed, right? So, but the euro USD is not given us a confirmation. You must understand how the market works, because the crosses have been trading each other. So sometimes what happens is the crosses might turn first before the majors turn. So you must understand that euro pound has already turned. Okay, I can show you that chart. So here, if you notice, okay, this is already turned up. So when you want to trade euro pound, so the best strategy is, you should be looking to buy on dips. But again, this one is what I feel is, the next immediate barrier would be at 88.50, right? So this will be your immediate barrier. So right now is 87.60, which is we have about another 80 to 90 pips on the move, right? So if you want to do, how you have to take this trade decision is buy on dips with 88.50 bearing in mind. So at least you know that, okay, when it comes down, okay, we can buy on dips. So then at least, you know, when the price reaches towards that level, we should know that we should be able to book your profits. Okay, the next, do you use momentum and volatility in your assessment? See, I mainly use price following strategy, right? And basically what the tools which I use is I use Gann numbers, I use Fibonacci numbers, I use trend channels, I use different in fact pitchfork, you know, these are the tools which I use to generate the numbers. So basically what I do is I trade on prices and not trade on price levels, right? And not on any particular oscillators or indicators. See, but when the price levels tells you, like earlier on I told you, right, I'm looking turn to happen at 88.50. So when the price levels is already in your mind, your indicators and oscillators should automatically follow. So whatever the tools which you are following, so end of the day, it has to follow in that manner. So end of the day, what I feel is this is the key in your successful trading. So end of the day, you follow that price strategy. I think everything should follow by itself. Okay. The next question is, can you do a session for candlestick patterns? Can you once again tell us which moving averages? See, we do not we do not mind teaching on this, but again, see, this session is mainly for discussing on different crosses. So if you feel that you want to discuss on candlestick, maybe you can write to us. Okay, our website is precisetrader.com, right? I'll give you the address. So we can arrange a session on. Okay, this is our website, and we do reports on. Right now we concentrate on about 12 crosses, but you know, our new website, which is getting ready, once it's done, you know, we will be focusing on about 37 crosses, right? So you can our report, a lot of traders, they use our report and they take the trading decisions based on the report, because you know there are specific zone levels for you to use to take trades. So and things can be much more clearer, because you know, once you know that, you know, I only want to take trades at specific price levels, so the chances are, you know, your emotions would be at bay most of the time. So and as a result, I think, you know, your risk versus reward would always justify, and the chances are, you know, you won't go in the wrong side of the market, or you wrong direction of the market. Okay. Okay. We have any other questions before I think the session is coming to an end? If you have no other questions, okay, Okay, the next question is, which moving averages do you apply on your charts? Okay, the moving averages we apply is 21, 34, 55, 89, 100, 144, 199, right? And again, I want to tell you is, when you want to learn how to use the moving averages, you must understand, or you must know that moving averages are a lagging tool, right? It doesn't tell you the price when the price is making a new high. The moving averages can be only useful when you're trading on retracement, right? And also, like, you know, there are different moving averages. There are simple moving averages, exponential, displaced moving averages, so on and so forth. So different moving averages has to be used on different scenarios, and different groups follow different moving averages. So by the time, you know, you use or follow on certain moving averages, and by the time you get a confirmation, chances are you might miss that move. So what I would suggest is, when you follow a specific price level, then you know that, okay, this is what I'm going to do. So at least, you can be pretty sure that, okay, and your emotions would be controlled, because, the successful trader and the trader who is not being successful, the difference is because, the successful trader knows to control his emotions and knows when to trade and when not to trade. And an unsuccessful trader, what he does is he's emotionally bonded, and every time, especially when he gets stopped out, chances are, you tend to get losing again and again. So that's what makes the difference. Yeah, right. Basically, I'm a firm believer of Fibonacci, and all these Fibonacci numbers. That's what I use. 21, 34, 55, 89, 100, 144. Yeah, you're right. Basically, I'm a firm believer of Fibonacci, and I also do apply Fibonacci in a different manner. So these are the ways which we can use to put in your trades. Okay. Okay. If you have no other questions, okay, thank you very much for coming into this session. Okay. In fact, next week we do not have a session. I'll be away. The following week I'm looking forward to see you again. But try to ask more on that crosses, because I do not know. Maybe I feel the market has been pretty quiet. Maybe that's one of the reasons why not many people are asking questions. But I think it's good to ask questions, and we can learn as a group, right? So could you go over your rules for entry? Okay. Basically, in order for you to be a successful trader, okay, what I would suggest is it's best to know your destination and your risks, right? So the best way to be successful is, see, before you take a trade, like early on I told you, I was discussing on the pound US. Okay, the last one I was saying, right? So what I'm doing to do is, I told you I would be looking to buy near 160.70 or 160.40. So right now the price is coming down. So if you notice this is a 5-minute, and it is the valley is not confirmed yet. So I should be waiting. So I know that if I'm going to take a trade now, my risk is quite high, because I have another 40 pips, and if I'm going to put another 30 pips stop loss, which is altogether I have about 70 pips risk. So, and my reward is going to be only which is about 160, 160. I'm just saying, for example. So my risk versus reward doesn't justify. So the best way, like as I told you, know your entry, know your exit, and your stop loss. Then your emotions would always be at bay. So when you do that, so if I know that, okay, I only want to buy when the price reaches 160.70, then now what I'm telling you the price ratio, right? So here I only want to buy when it reaches 160.70. So I'll wait till the price moves to that level. Till then, I do not want to do anything, right? So on that scenario, at least I know that, okay, I have a specific strategy to follow, and at the same time, I am at control, right? So this is one way for you to do one of the best way to tell yourself to have a safer trade. Okay, the next one is, what about short signal on that large drop with no news? I didn't get your question. Okay, always what we should be doing is, as I told you, this is a 5-minute chart. You should always remember that you should be buying the valley and selling the peak. Okay, we do not believe in buying buying at the peak and selling at the valley, because when you do that, right now, if you are looking to selling opportunity, you should know that the price has already fallen so far, and your RSI is already like oversold, which is on the 5-minute. So the downside is going to be limited. So right now, if you go for a sell, okay, let's assume, you short now, right? You know that, okay, I have an immediate barrier, which is 160.70, right? So I only know that my reward is going to be only about 30 pips. So, but again, if I'm going to put my stop loss above this, chances are, because, you are ending that towards that, you're taking a trade towards the end of that move, which is not a good advice. So what I would suggest is you should always remember that you should buy at the valley. That means when the price comes to the low, then you buy. You should be selling when the price moves up, or sell at the peak. So this is what we would be doing, and this is what we would be suggesting. So that's where, the price level comes into picture. So when we tell you that this is the level to look forward, then at least you know what to look forward to or what not to do. Okay. Okay. I think with that we want to conclude the session. Okay. Thank you very much, and looking forward to see you again the next FX trade, which we have it on Tuesday. All right. Because not coming Tuesday, the following Tuesday. Right. It's on the 2nd February. Right. And I would also like to take this opportunity to thank FX Trade for organizing this event, and looking forward to see you again. Right. Thank you and goodbye.